Good afternoon. Welcome to OptionsTender. It is Thursday, May 22nd, 2025. Welcome, everybody. So we got a rejection that we're looking for. Our wedge broke. Yesterday, we talked about a little bit of support. So we're going to talk about that. We're going to talk a little bit about breadth, and then we're going to check out our indicators that we look at every single day. And I want to make sure that we look at the 10-year treasury rate. And we'll peek at the dollar if we have any time too. It's super important because, and I made this full video. I'm not going to do the full analysis, but I did this video for members. I'll post that up top if you're interested in becoming a $4.99 a month member. Not much to ask for the daily analysis and individual stocks that we do there. Okay, and one of our traders in the Discord, and all of the two tiers come with the Discord. So if you want to, we're doing this intraday. So if you want to get this video intraday, consider becoming a 99 cent a month YouTube member. It's just a YouTube supporter, comes with the Discord, and we talked about putting some commodities out there as well. So and that includes MJ, which I've been screaming at the top of my lungs. I'll continue to look at MJ. It's in an equilibrium right now. And then things like wheat. We looked at wheat. So gold, things like that. Anyway, let's jump into this and make this a quick update for you, as quick as we can, right, with getting all the information. And so let me close this down. And we have our rejection off of this consolidation area here. So that created support resistance. It's also a volume node because of all the trade that went around it. And so the bottom of this entire zone, on some of the charts, I have this all kind of blacked in and highlighted, I should say. And this was a distribution area. Okay. And so we're at the bottom of that area. And we talked about it yesterday in the video that that zone would act as minor support. And so we're either pausing today for a continuation, and or we could get a slight small bounce back into this zone here where we had our Harami setup. All right. And we had the price action breakdown from the bottom of this candle. That was the trade setup. That's what we talked about. That's what we took. And so we put on quite a few trades yesterday in the Discord, and we're at support. This move is hardly even started, in my opinion. And if you're bullish, there's a zone here, and I'll show you two actual zones that could hold. All right, so make sure you stick around and play this video at 1.25 or 1.5 speed so you can see all of this information. It's all super important, the things that we talk about here. And then you can compare them to your own analysis and maybe even other YouTube analysts out there, or Twitter, wherever, or X, wherever you get your information from. So now, I think we're going to close the gap. That's my opinion, and see a little bit of support in this area. And perhaps that's a little bit larger bounce before heading lower in an impulse wave. But price action, I can't tell what the market, I can't tell the market what to do. It has to tell us. So we'll see if price holds at this point and bounces and goes to get a new all-time high. That would be the alternate scenario. All right, let's throw on some moving averages. So the moving average is right here, and this is equivalent to 575. We're at about 5,760 here. Look at this all coming together. We're underneath the 8, but does the 20 simple moving average along with the 100 and the 200 coming together, it looks like maybe Friday or Monday, perhaps into Tuesday. Do we get support here? At least a bounce. It looks like a good area. Do they save the day? Maybe into Friday we come and get a bounce, down, bounce. What that would provide to me, if it's rejected after that and we break down, is that all we're doing is nesting, right? Because the momentum's to the upside. Our momentum on the 8 EMA is no longer to the upside, but it's starting to move sideways. We're just under it, rejecting it. And the trend is still up. Okay, so everything is still in good shape for the bulls, but let's see what happens as price goes down. And if we start seeing bounce, breakdown, bounce, breakdown, then all it's doing is setting up the momentum to the downside, 1-2, 1-2 setups. And it's not very typical when you say that there's going to be a reversal. That price just completely rips to the downside. Of course, if there's a catalyst, that may be, and in this administration, who knows what will happen, what catalyst will come out. We had the 10-year, I should say the 20-year bond auction that was kind of that hidden catalyst that too many people don't pay attention to. So that's why we're bringing up bonds today. So those are the areas that I'm talking about. Does this hold or give us a little reaction? And especially, does this hold where the 50 moving average is below this? And I think the bears are fully in control. All right. McClellan oscillator. So we talked about the McClellan oscillator, and we're going to talk a little bit about breadth. That's what this indicator is. So if you want to use the indicator for breadth, we're extremely negative here already, and we've only had 3 days down. This is the third day down, but you could see that reflect in the daily breadth indicators. And the first one, the one that we look at the S&P, is ADSPD with the dollar sign in front of it. It's been negative. It got a little bit better. It was negative maybe 370 earlier, and it's slightly better right now as the market kind of evens out, levels out for the day. And then the other ones would be the ADD that we look at and along with ticks on kind of that lower time frame to see how the market's going to act. And it's really signifying that it's just negative to choppy at this point. Okay, so just negative here, and this can get much worse. Believe me, it can get much worse, and it doesn't have to move very hard to do so. What you have to do in those cases where the rest of the market is very weak, you have to look to these. All right, these are the only things holding us up right now. Okay, so if those give up, then the market gives up. And vice versa. If these are just extremely bullish and just start ripping to the upside, it could cause order flow and start to bring the market back up as well. So we'll need to see how that is when we get into more support and then more support. All right, and you better believe they better hold this zone here between 56.50 and 55.50, we'll call it. Okay, enough time on that. Here's the options setup here. We're looking for a crossover. We don't have the bear crossover, but that appears to be imminent. We'll see what happens. We're still in bullish territory. So even if we come down to that support zone, the momentum could turn over and hold the zero line. It will need to hold the zero line, and that doesn't mean it can't cross under and whipsaw back up. All right, so we're at this midpoint. We're neutral in the RSI, and we're negative here in the slow stoke that's coming down, breaking that trend there. So we're starting to see a shift to the bearish side here. Now it's not all the way. There's still hope for you bulls, but it's not looking good. So 1-2 setup on not a 1-2 setup. It is a 1-2 so far on the D mark. Just following that along. 2 red bars on Awesome Oscillator. Let's go over to SPY. All right, here's the money flow index. Money is flowing out. That's all there is to see here. If we do, by chance, hold this gap in that zone that I was talking about, then perhaps we make one more move up into overbought territory. Bollinger Band, we already had the sell signal. Volume shelf, we already showed that we were at the volume shelf yesterday. Elliott oscillator is starting to come down. Okay, and the oscillators and the Awesome Oscillator as well. You'll see it on the 65-minute, but on the daily time frame, if we hold this and make a new high, then we should get a negative divergence on that as well. We have the 887 right above us and a volume node there too. So even if we do make a new low, that could be a 4 and a 5. It still could reverse at higher levels. It just becomes less probable, if the market sets up for another move. I'm looking for just a slight new high, or maybe into those historic trend lines up above You can see the weekend video. I showed all that stuff, and reject from there. And this would end up being called a wave 5 rather than a 1-2 setup. But I'm not there yet. I still think this is going to roll over, and we'll see what happens from there. All right. So there's all the indicators. And timing, not there yet. We'll see what happens in this cluster here starting next week. Okay. Quickly, this is our setup right here. We're in the zone of the 786 and the 887. The 786 is acting like resistance so far. It held on, this day, and then moved up again, held on twice. So kind of doing the reverse here. All right. There's no surprise that this is the zone that we've been talking about. There's a cluster. Again, we talked about all this yesterday in much more detail. If it comes down here, I think we'll get a reaction off of there, closing the gap. It's not only the gap, it's also a fib cluster for many different levels, all right, that I made up. And I put all these levels and showed everything in the bear market part 1, part 2, and we're on part 3. So I'm going to put part 3 at the end of this video so you can see that, the update. But you can look at all those parts and see how this all develops. There's some uncertainty here earlier, and I thought it could have gone to test the lows or even gone lower, and then price action just held those moving averages that we were talking about. Let's go to we're just going to go to, because there's nothing new, just to TNX. It's not just TNX anymore. Has the SIBO changed it? Where are we at? Here it is, this colon CGI. Okay, so at first glance, this could happen. I'm not saying it can't happen. Left shoulder, head, right shoulder. Okay, so far we're in equilibrium if you draw a triangle, but we'll see. Actually, I will draw that triangle in so you can see here. I think this is the dominant thesis. Here's the high, and then we made a another recent high there. But coming into this, I think this is a 3-wave move for an A. I think we got our B in here, and we're looking for a 5-wave move down for C. So in the shorter term, and this is the very important part here, is that as rates went up, we were relatively weaker in the small caps and stronger in tech. Okay, that same thing's happening right now. But if this arrow says anything and we start reversing, we're actually at the 786 right now as well. From high to low, we reached the 786. All right, so this is a 1-2 setup, and what happened with this one, this could have been it, made it back, a sharp move, but that was an impulse move. Then we had a 3-wave move down, so you had this breakout, and now we made new highs here, but it's really deceiving, because we had another 5-wave move, 1, 2, 3, 4, 5. So you have a zigzag here. That's a corrective move. The only way that this is going to be positive. All right. So I think this is a 1-2 setup, and we get a big old wave 3 down, and the market's going to have its big old 3-wave down. Okay. And yes, SPY 583 is the target. Some folks in the Discord look at me like I'm crazy, but that's our target. So now this is going to be sell tech, and we've already started our reversal off of the 786. Now here's the bullish scenario. I think that if we do a 1, 2, 1, 2, because they're both 5 waves, and we pull back maybe to the 43 or so, maybe midway, it could start get a little more bullish. Maybe you use the moving averages, right? Starting to curl up. Then you see this rip to the upside. It's still going to be bad for the market, but it's going to be bad in a different way. Okay, right now we're kind of going back and forth where rates have been up long enough to be harmful, to slow down the economy, to put everything at a halt. If things rip higher, it's going to be devastating for small caps and for any debt holders. If it breaks down, we have a recession coming because the economy already halted, and bonds need to come down in order to stimulate the market. All right, bonds rule all. And either way it goes, big, large moves in the bonds and opposite of rates affect the market in a different way. Now, if this keeps going sideways, nice and clean forever, then we're going to be in probably an okay spot. All right. But if this thing rips to the downside, not good. Rips to the upside, not good. Okay. Well, enough time on that. Quick look at the dollar. I think the dollar is setting up to the upside. I know people are saying it's going to crash. It's all over. I think we had our ABC. There's our Elliott wave. Didn't mean to go there. We're underneath support here, but I think this is going to be a fake break. We actually have a nice, and I'll go ahead and go to the 65 so you can see this setup. Here's this falling channel. That was the last move. We actually are at support right now. And although there's resistance here and we rejected off of it, we're setting up a nice 5-wave move. 1, 2 setup, and this thing can start heading much, much higher. And that will be, if you look on the higher time frames, I showed that too. That will be a good sign that, not a good sign, a bad sign, strong dollar, but that people still believe in the dollar. That's the good thing. But the bad thing is that we are probably into the recession and there's no real place to put money except the dollar and in treasuries. Okay, here you can also look at like this. And I'll put these arrows in so we can refer back to them one day and be like, hey, that's what happened. Or that is not what happened, and we can learn off of it. That's a good thing about these videos. If you trade these different than what you analyze, you have to trade the market. So let's go back to SPY and go around the 65, go around the horn with the indicators. So again, we trade the market. It's selling us down right now. We're starting to curl momentum, and this time frame is lower. So there's this wedge going on here. You see these supports. First of all, that's the gap. There's the green area that needs to hold. Here's the bearish rising wedge. We broke down from that initial wedge here that was on the daily time frame, but we had a spike down here. So I want to leave this here because it's a geometric line. It's a potential trend line. All right, we're not quite there yet. Maybe we're in a 1, 2, 3, and we're getting a wave 4 today, and we hold on to the gap and then bounce. Head lower, break, bounce. That would give us a nice 1, 2, 1, 2 setup. That's possible. If some sort of catalyst happens and we've already had like a 1, 2, 1, 2, and whatever the case is, we don't know that until it gives us to us. So we're not going to trade, expiration into tomorrow. If we get a higher bounce, then you better believe I'm going to short it in a little bit less time frame than June and July and all those. I'll probably go out a few days. But we have no idea what the market structure is. Even though we've had some early sell signals, we don't know how this is going to pan out. This could be just a doji on the weekly time frame. We'll look at that this weekend. But right now we're just, we had the weekend here. And then a week here, we're not quite below the weekly candle, at least the gap up. And so we're forming a outside reversal candle on the weekly time frame so far. Indicators, there's your moving averages. McClellan, nope. Here's the MACD. So even this kind of says that we're in a condition where we could get a bounce here soon. Maybe we'll see a positive divergence going into the trend line. And then we can get our little bounce. And then maybe this will be oversold quickly because the RSI will do that. If we're in a downtrend and we start to bounce, we don't have to get very far up, and the RSI could already be overbought. So we're just now getting to bearish territory after negative divergence, and the slow stroke is a headwind against the bears right now. So again, most of this move I think is over. We might get a little move down there, and then a bounce, and perhaps a bouncing, nesting, and then a move lower. DMARC. Starting to get an 8 count so far. I'm not sure if that's going to play out all the way, but we had our 9.9 and then sold. Awesome Oscillator getting into negative territory. We'll see how that manifests. All right, no real. Maybe this will head lower into the trend line, but no real setup here on the money flow. We just know money's flowing out right now at this point. And the Bollinger Bands are being stretched. So again, momentum's turning, but this is really a buy point on that very low time frame. So, you know, if you're scalping futures or something like that, by the way, we had a great futures trade. I just took profit off of it because I still feel like this is going to bounce and we have a chance to get back into it and bounce first before starting to get that momentum to the downside. And so we're oversold into the bottom end of the, even though it's expanding, which is great for the bears right now. We should get a tiny bounce, if not one more low, and then a bounce after that. Not playing the bounces, not a chance. I'm not playing these bounces to the upside. And there's a 20 moving average, so it would be minuscule if it does. And nothing to see. Elliott Oscillator showed that our wave up here was done. And I believe the whole wave count is done. But bulls are looking for one more high. Okay. Changing boards. Here's our primary look here. We had the end of the waves, and we're starting wave 1. I think it's more likely that this was a 1, 2, 3, and maybe get a wave 4 into 5. Okay, and then we'll get a 1 here. So let's start this wave. So we'll get a 1 here. It doesn't matter if you use Roman numerals or whatever your thing is. I switch back and forth. I think we'll get some sort of 1 on the trend line. I think maybe this is just consolidation, maybe a gap down tomorrow. And then we should get a 2. And then in a different color, I think we'll continue. And I want to put these here because, again, what we talk about, I'm not going to remember everything. And so if I put them out there, maybe we'll be able to look at these again. And then another 1, 2. I think we might end up nesting. So and what would happen here, if this is the case, if this ended off here, we get a little bit of a bounce, that would give us our doji for the weekly time frame. And then next week we can get continuation. But I don't know how far this wave 1 would go. Probably to close the gap, right? Because that's the next step before. And you got solid support here. So maybe even all the way down here. I don't know, but then you get another 1, 2. So we don't break the trend line yet. Maybe this week we don't break the trend line. We break it next week. And now this is considered a back test to that trend line. And then we start to spread out. Our wave 3 is much longer, and then 4, and then the rest of wave, the white going into purple, wave 3, and then 4, and then 5, and then we're testing the lows, right? And then we can have our intermediate at that point, because our primary is a wave 2. So then our intermediate wave 1, wherever that ends up, and then another wave 2, and it starts to really start to accelerate to the downside, where you get wave 3 of 3 is really intense. All right. So I talked you through that. That's what we're going to look at. We saw bonds. Be careful out there if you're a bull. We're going to look over this tomorrow again. So thanks for all the subscriptions, all the likes. You guys have been fabulous. We're growing this channel. Get out good information and make some money. We'll see you tomorrow.